Hey, good morning. Hope you're having a wonderful day. We're looking at Luna. I'm on a 15-minute chart. I already got my fib levels already up. All right, we have visited the 61% retracement level on the Fibonacci retracement tool. We also have a key little area right here at the 70%. That is a level that was support. Support was broken. We have not retested it. Now, here's a few things that could happen. What we're seeing right now, this is potentially a rising wedge pattern, which really is a bearish type pattern. So we could see this start to trend a little bit upwards. All right, and eventually we could see that this trend line area right here at the bottom could break to the downside. Now, if you are taking out future contracts, of course, the first area you probably want to be conscious of is this area right here, which is really the 50% retracement level. But it is a nice area of market structure where price could head to. Now, this wedge pattern also could turn into just a classic double top if price comes back up here and we get another retest up here. We create a double top, and we could come down further. Now, let's do this. Let's look at what we could witness if we have a retracement just by measuring where we currently are now with this. And now we're looking at downside. Now, check this out. We haven't even recovered to the 23% yet. This is where we want to see price come down to. And from where we currently are, all the way down to here, that's like a 69% something drop. If you're taking out future contracts, that's a possibility for a 690% gain on your money if you're going short, technically, right? So, once again, this is not financial advice. And you must consider what risk comes with future trading. All right, so that's out of the way. All right. So yeah, these are the key areas that price could come back to. Um, I do expect price to go ahead and find some exhaustion. Here's the reason why. I mean, Bitcoin has just now resumed to go a little lower. Now that could be um, a little shallow correction. It could push higher. I have to go back and look at the chart, and I will in a few minutes to get a better snapshot of it. All right. Now, we are currently in this trade. We got in this trade around, let's see, what price for here. So, yeah. So, we're still up a lot. That's over 32 something thousand percent. We're still up a lot on that. Now, granted, I did not put a lot of money in there. So, you know, we're going to put like $150 in. So, but that's still gain. That's a lot of money that was made for that little bit. So, it is what it is. We treat it as like a lottery pick. I mean, shoot, if I lost $150, I don't care. If it want to go up to absolute zero, like I said, I don't care losing $150. So I'm not gonna lose no sleep over that. So this is one of those risks. Like to me, it's like a risk free type deal. I'm willing to lose that. Now I know some people put in a couple $1,000, so I wouldn't have done something like that on something that volatile. That's really risking. And when we took some option contracts out, I'm sorry, futures contracts. We did pretty well too with that. So that worked out pretty well. But Luna is really a in a unique situation. If they could turn things around, I mean, it could be worth taking a risk on. This drop is nasty. We can see how they can recover. But as I've spoken on many times before, you have to pay attention to these type of wicks. And I mentioned it before. Something big came in the market. You, as a retailer, cannot create this type of buying pressure. So something came in and massively got filled. Now, here's the thing you have to think about. Whoever got massively filled right here, they also could look to dump eventually, and that could create a crazy sell pressure. So let's play out some different scenarios. Let's say they don't massively dump because they don't want to really trash it. They really want to make enough money. It's because remember, when institutions get in, at these type of levels and their price comes up, they cannot sell everything at one time. If they do, it'll just push it further down. So I have to take a little bit off the top. And we were on the 15-minute chart. You can see some of the little um, ups and downs, and that all that is institutions taking some off the table, etc. All right, now let's play devil's advocate. This is an area to keep an eye on. All right, this area hasn't been retested yet, so this is at what 71 cent. Imagine people who are holding a couple million, right? 71 cent. A lot of them might have $710,000 or so. All right. Here's going to be some of the issues you might have. If too many people are holding that amount and they all try to sell up in these areas, which if you watch this video, I'm actually giving you a little bit of a cheat code because most people are actually trying to do theirs at $1. What is that? It's a lot of orders right there. It's around $1.15, but you get it. So I'm making that's about as good as we'll get. This is a lot of people got it right here. You know why? Everybody's infatuated with making $1 million. So they got these big round numbers. Okay. Now, if Luna goes lower, would I buy more? Possibly. Here's the thing. Last night, I wanted to buy more, but I wanted to stay within a strict rules base. And I felt like if I bought more, I'm really going against my investment mentality. I'm not really a short term trader, but although I see some opportunity in Luna and we did exploit it and it worked, that is not really a strategy that I really live by. So it's just one of those opportunities. Now I did think I said, well, maybe if I add a little bit more, but then that's really greed too kicking in too because I'm seeing what it possibly could be. But the data on the chart suggests that listen, maybe everything is not over yet. Well, maybe this wick will get filled again. Maybe I have to come back down there and fill this wick. So a lot of things we have to take in consideration. However, the upside potential still is so great that investing a little, it possibly could be something worthwhile, right? Now, if we do come back down these areas, I possibly would add a little bit here. When I say a little bit, I'm talking about like $35, $50, $75, because I don't have to spend a lot to get a lot, right? So that is the beauty about something being that particular low. You don't really have to put the whole entire house down to make it make sense, right? But check this out. Everybody is setting their orders at $1. Well, shit, if everybody's setting in orders at $1, would it make sense for you to set your order somewhere else? Because this is one like nobody's talking about these levels right here. What is this? Let's see how much this is from where we currently are. So this is another 4,000 something percent gain. All right, and we go back up here, and it's at 56 cent. And you got another. This is two. This is 201,845% gain. So many people will miss out on those levels trying to hit the home run at $1. So if you put your orders before everybody else, you may give yourself a chance to get filled because all the other orders are up there. Now, you have to ask yourself this. If it does go to a dollar, and it's too many of y'all that's gonna have too many millions because of the price point, right? If it goes to that price, and now you got $1 million, and you hit the sell button, the question is, how many other people also have $1 million worth? And what's going to happen is all of you are going to be trying to sell simultaneously at the same time, and you're not going to have enough volume or demand come in the market and buy at those particular prices to sustain it. So price could collapse at that price point again. Or here's what we're going to see: you would see a flash crash or flash spike up until that point, and then all those sell orders were triggered, and not enough demand come in. Only way I can see the demand surpassing that is if, so yeah, we're talking about this right now, but the average person still don't know nothing about Luna, or if they did hear about Luna, they're very afraid now. They don't believe in it. So what possibly could happen is that people who find Luna at $1 are gonna look at this all-time high and be like, shoot, that's still a nice gain. If I can get it at least up to $50, that's 50x my money. So I might be okay to just buy at this level. So you might get some of those to come in. That's a possibility. So that's why I say I'm just playing different scenarios that what could happen. Now, let's say the exchanges decide we're delisting, we're getting rid of it. Now so you see why I wouldn't throw thousands of dollars on this. If it's in jeopardy of being delisted, that's a waste of money. Like I said, if they decide to delist Luna today, I'm not about to cry over no $150 invested in. I'm sorry, not. Now, Luna was originally a dark horse project. Of course, now, since everybody knows about it, it definitely is not. It's not fitting that criteria. The fundamentals on it have just been impacted so much, it's not really worth it, right? But I want to show you something. When we screened it and we found it at 13 cent, which is around this price point right here. All right, in 2020. Now, when we screened it, this 13 cent, let's do some math. Let's do some math. All right, so um, let's do $600. Let's use the random numbers. Divided by 13 cent. So you get 4,615 coins, and then it went to, all right. Some places said $160, but I'm just going by the chart we just saw is at 119. So your account at one point would have been up $549,230.76. Okay, that's successful. Is it a long term sustainability? No. I mean that happens. But my question to you would be, what would be your plan at this point? You got to be honest. And I think it's important for all you guys to go back and look at these charts and look and hindsight is going to be 2020. You need to go back and you need to look at the charts of every asset that you have. Okay. And you need to say, okay, if I got in here and if I put this amount of money in, when would I really take profit? What would I do? How would I manage it? That is how I created all of the strategies, the dark horse coins. I had to go back, or I experienced it in the earlier years. I'm like, okay, what could I have done better? So you just saw me do $600 based off of Luna. Well, for one, so for me, that 600 would have been broken into maybe three tiers of $200 each. So let's do the math. Um, let's actually break this down. So we'll do divided by three. All right. So $183,000 or so would have been left at the top, and maybe the other portion of it would have been sold. So let's do it like this. So how many? Okay, so originally we got 4,615 coins, but let's divide that by three. All right, so we get 1,538 coins for each tier. So that's three tiers, right? So what would be my first target for my first batch? Okay, we're at 13 cent. And that's the tricky thing, right? So here you see that the all-time high over here to the left was once at $1.33. So there's a possibility that I could come up and say, hey, when it gets to $1 and 33 cents, I'm going to sell off my first tier. So times $1.33. I make 2,000, $45.98, right? But you probably be like, man, but look how high it went. You really got out short. Once again, this is why we do this. You're gonna have to be realistic. It's so easy to look back and say what you would do because you see what it done. But watch this. I there's nothing over here. I don't know what the future holds of this. What hell? We can turn around and something stupid come in the market now. We way back up here. I don't know. We don't. This could be a V-shaped recovery, just like the stock market was. I don't know. It's probably not likely, but once again, the market can do whatever it want, right? So you have to factor in. In fact, whoever some people bought at 15 cent, 20 cent, 30 cent and thought it was a steal. And then it just dropped. Nobody thought it was gonna go this low. These prices like sheep horn type prices, right? So, that changes the game. Okay. So this is being realistic. Now, me looking back, would this really have been ideal to sell at this price point? Maybe, maybe not. Or possibly I could say, let me take out what I originally invested, which was what we say, $600 something. Take the 600 off, so sell enough to cover the 600. Now you have your 600, and you can either put it back in your bank or you can look to invest in something else. Now it's risk free. It's risk free now. All right, it's moving, it's going on up. But the question now is this: would you take profit here, here, or what about here? Here, you're probably like, oh my God, it's gonna go down, just like this one did, right? Now what happened? Consolidated, move sideways. What did I tell you about consolidation? Consolidation occurs because something strong came in the market, and what it's doing is doing micro buys. All right, it's micro buying, and then that it pushed the market up, and then as it micros like this is market players scaling out, scaling out, and the retailers are coming in through greed. All right. And they're scaling, and then they unloaded and the bottom fell out. But looking at this, what is your plan? I could give you a blueprint of what some plans you can have, but ultimately you have to be able to create your own plan as well for what you can do. I told you, you're gonna have to choose your regret. You're either going to regret getting in too late, getting in too early, selling too late, holding on forever. Um, all those. There's you're gonna have one of those type of regrets. But over time, you're gonna learn to live with yourself and your decisions and what you make. We cannot time a top, cannot time a bottom. If we could time a bottom, everybody in the whole world would have been just sitting right here. Everybody in the whole world would have just sold right here. Nobody knew that it was going to do this. Nobody knew it was come here and do this and then do that. We don't know. We got patterns that can show up on the chart to give us an indication of what could possibly happen. But at the end of the day, we're not psychics. We don't know. But we do see these patterns over and over. We do. I told you over and over what type of pattern this is, and we use our iconic character, Bart Simpson. This is the Bart Simpson pattern. And then what happens on the Bart Simpson pattern when it drops like this? It has some type of relief recovery as well too. Let me show you. All right, we got the pattern, we got the drop, and then you see this little relief, a little rally right here. Typically, that's what you start to see. Okay, and sometimes it goes higher um, for the recovery. Okay, so the pattern. shows up a lot. And once again, let's go to a lower time frame. Let's go to the 30-minute chart. You see, you see what's happening, right? So this is just a recovery of an impulse. This is not denoting that we're really truly bullish. Now, I mean, we temporarily bullish. This is just a correction, and you can trade the correction. All right, I got a strategy called the 23% rule. I really don't even educate people on it. I had it out at one point, but I pulled it because I wanted to refine it, which I'm gonna start working on refining. But here's something that I noticed on almost all these corrections, and when a retracement kicks in, it typically does something phenomenal. It crosses over the 23%. Now watch this. When it crosses over 23, you do not buy. When do you buy? When it comes back either below the 23, well, actually below the 23%, okay? And then when it comes back over, we look for buying opportunities. But here's the issue, and this is where I'm refining my um, strategy. Typically, what happens is sometimes it'll come back and hit right here, and then it'll come back over again. So the strategies was a trading strategy. So that coming up and that ping pong type of deal, it's dangerous for me as a trader because I'm using leverage. Okay, so if I'm using leverage, this could be too much drawdown for me. All right, so I don't like it. So I've actually took a break, but I need to refine it. And once I refine it, it's been very accurate. Then you do it. But clearly, we crossed over. Okay, most people run into the market, not me. I will say no. It needs to come back and revisit this 23. Why did we say this? When it does this, we have the greatest chance that it's going to go to the 61. And what did they do? It went to the 61%. So I have to refine and do. Now, guys, the way I trade, the way I invest, there are things I have not even really gone deeply into. And it's for a reason. It's because I'm still analyzing, I'm still doing it, I'm still doing empirical, historical data, and I'm gathering, I'm seeing how accurate I can be. So a lot of you don't know, I'm literally working on building out my own algo, my own algorithm, where now I can send an algo out and does all the trading for me. You know why I want to do that is because one of the guys that started out to mentor me in the options contract in the options game, he actually used the algo. He didn't do any trading himself. His algo did everything. And I remember vividly asking him, like, well, can you teach me? And he said it just like this. He said, well, if I teach you, then I'll be revealing my secret methods. It's like, that wouldn't make sense. And I said, you're right, it won't. And from that day forward, I understood what was really occurring on the top level. And this guy was a multi-millionaire and he was a top trader for like, some of the biggest institutions in the world. So I got it. I get it. I'm like, I got you. That's fine. It's cool. Okay. And you're gonna when y'all start hitting your stride, some certain things that you just don't want to tell everybody because although we got a lot of free content out there, it's a lot of people on YouTube giving out some great strategies, stuff like that. What you don't realize is the algos are starting to be programmed to where it can start beating those out. Um, you're because the herd when the herd is doing too much of the same thing, the algos are now will kick in, and you're probably going to see a lot more what we call fake outs in the markets because what it's doing is that it's tricking the algos, and it goes strong in one direction, wipe them off the table, and then it eventually go. So it's one of the reasons why I refined my sentiment trading. I started using it more, and if you understand supply and demand, that is the ultimate thing that we need as investors too and traders. So once again, that's me really getting in here. But I want you guys to start really studying who you really are. What is your true real goals? Get out of the money aspect of things. Like, oh, I want to make $1 million on this. I get it. No, you need to really be focused on the personal development of who you are so you can become the best investor and the best trader on this planet. that you can be. When you focus on that, what happens is now you'll be ready and you will see opportunities. You will do things. And you may look at something that I'm looking at or doing, and you may say, "Nah, I don't like that. This maybe he don't see this or that, but I see that." Well, that's you and your uniqueness, and that's great. It's good. Because I look at some of the top traders in the world and I look at what they're looking at. And I'm like, I don't see what they see. There's no way I would take that trade. Let's do this. And sometimes I'm right, but sometimes they're right. But that's just me being my unique of what I am, right? I really believe in my skills more now because I'm really honing in. I did try to come out and, you know, teach people, motivate people to take this thing a little bit serious, but at the same time too, I can't get to a point where I'm overly invested in wanting everybody else to win when it's time for me to really hunker down and apply what I know and keep it moving, right? So um, this wealth building journey is really about you and your future, either offsprings, family members, or whatever legacy you want to leave. You're going to make mistakes. You're going to lose money at times and all that. The people who do not want to invest because they're worried about losing money never makes money. If you think about that, the people who worry about losing money rarely makes money. Okay, you got to get out there. You got to make your mistakes. You got to fill it out. Now, there are rules in investing where we try to minimize losing money. But the reason why you want to minimize losing money is because you went through a phase of losing money and now you understand it. You have the emotional imprint, the pain of it. You didn't give up. Now your risk reward ratio is a little bit different. You're more tactful. You're using a plan. That all is because you went out there and you failed. If you're not willing to fail, you're not willing to grow. It's the only way you can grow. If everything is so easy, it'll be actually to your demise. That if you actually came to the market, which happens to a lot, people get lucky, they come in, they do great, the market's exploded, and they just keep going up. They feel invincible, and they're like, "Hey, I got the holy grail." And then when the markets turn and they get too cocky, oh man, I turned $5,000 into 500,000. Oh, I'm God's greatest gift to humanity. I know what I'm doing now. And then what happens? They're like, if I turn 5,000 to 500,000, man, I could turn 500,000 to maybe 5 million, 50 million, whatever, right? What happens? They lose all the 500,000 and they go to zero. They'll say, it'll turn around. It'll turn around and breaking every rule in the book. It happens. It happens to the best of people. So don't come into any market as a temporary fix. Commit to the game. And if you can't commit to the game, then by all means hire a certified, licensed financial person. If you want to give them your money for them to invest, then by all means go do that. But that ain't really how you build wealth. Mainly people who do that, they do that to preserve wealth. So you gotta think of it like that. Okay. Also, here's little advice, a nugget. Let's say you got a few $1,000s and you know you don't want to trade, but you know your money needs to work. What you can do is you can figure out and you can create you an investment company. And what you're going to do is you're going to find some people out there who really wants to do this, and you're going to hire them, or maybe they would be managing partners of your company, and you're going to pay for their trainings. You're going to find them the best education on how to trade. You're going to pay for it. And when they come back and they learn it, they're going to trade your funds. And boom, voila. You have traders trading your money while you do whatever you got to do. It's multiple ways out here to make these things happen. Now, I wouldn't want to work for nobody to do that, but other people who may want to, because that's what some of these people who do combines, that's essentially what they're doing. They are traders that are trading other people's capital. It's no different than you creating your own, and you can do the same. All right. So hit the like button, subscribe. Y'all have a great day. And please go out there and start looking at some of these projects that you love, whether it's stocks, crypto. read up on them, see what they're doing, what problems they're solving, and get married to the value of what they're providing and not so much the price. All right, you have a great day. Enjoy the rest of your Saturday.